Hey guys, in this video I'll be going over 7 tips to help you grow your small trading account. I've personally taken 1K to over 25K, $750 over 10K, and many, many more. So when it comes to growing small accounts, I truly know what works and what doesn't work. In this video, I'll be giving over 7 simple tips to help you grow your small account and what you should be doing to grow your small account. So without further ado, let's get straight into it. Before I start, I'm PB, 16-year-old trader. I found success at a young age. And with this YouTube channel, what my plan is to do is to simplify everything. My motto is I make the difficult simple to my unique way of sharing education and knowledge. So with that being said, I'm going to make everything in this video simple, short, straight to the point, and I want everybody to understand. That is my mission. Let's go. So, tip number 1. Everyone always asks me, PB, what type of account should I open up when I get started trading? Cash account, margin account. Oh, I can't trade, day trade. I don't have $25,000, blah, 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 blah. You do not need $25,000 to start trading. You can start trading with $100. You can start trading with $200. You can start trading with $500, which I wouldn't recommend starting trading with $100. But it does not matter, guys. You can trade under a cash account. A cash account allows you to have unlimited day trades under 25K. But the only thing is, it takes overnight for your options buying power to settle. But in my opinion, it's better like that. It truly is, because it's gonna help you to not force trades and to take a chill pill. So I would use a cash account if you have under 25K. And if you're also asking yourself, yo, how much money should I start trading with? Trade with an amount of money that you can afford to lose and doesn't affect you. So if you have $5,000 in your bank account, do not go all in $5,000. Maybe do $1,000 if you can afford to lose $1,000 and still have money for your groceries and money for your bills and money to spare. Because the truth is, you're probably gonna blow your first account. That's the truth. So start trading with an amount that you can afford to lose and be okay with. Number 2. How much percent of my account should I use per trade? So I would personally recommend putting around, well, when I grow my small accounts, I usually put around 10 to 15% of my account into each trade. No higher, sometimes lower if it's not a higher confidence setup. But I would not recommend putting half your portfolio in one trade or full porting one trade. That's a route to a disaster. Full porting, putting half your portfolio in a trade, that is the easiest way for you to fail. I promise you, take it slow, add up the base hits, and that is how you will make money in your small account. So when you're looking to take trades, I would not put more than 10 to 15% of your account into each trade. So with that, you can risk, 1 to 2% of your account with a proper stop loss to make 4 to 5%. And that's how you really have growth. When I took $1,000 to $25,000 2 summers ago, I didn't put more than 15% of my account into any trade at one time. I don't think I actually made more than 10% of the account in a single day. So I truly just took it slow. I added up base hits, and those base hits eventually put me in the position to hit home runs. The more base hits you add up, the more runners you can let run. So I'm telling you guys, do not full port. Take it the smart way. That's how you make real money trading. Remember, we're in this game for the long term. Don't try to get rich overnight with trading. That's not going to work. Don't try to make back your losses overnight. No. Take it slow, learn your strategy, and that's how you will make money. Okay, tip number 3. PB, how much profit should I look for into each trade? So personally, for me, I would recommend trimming at around 20 to 30% and letting runners go to 50 to 60, 70%. But you do need to take some trims at 30, 40, 50%, and then eventually you're going to let your runners run. So 30 to 50% is around the area, and then if you could, then you let your runners run. Next, what should your stop loss be in each trade? I would say around a 15 to 20% stop loss is good on each trade. So, but if you're having a 15 to 20% stop loss, then you need to make at least 30 to 40% each trade to have a 1 to 2 RR. meaning you're risking $10 to make at least $20 on each trade. Therefore, you can take 3 trades, lose 2 out of 3, and still be a profitable trader. So keep your losses small and move your stop loss up. So this is what most people don't do that I think you guys are missing out hugely on. Say I'm up 10% in a position, right? I am not going to let that 10% go in the red. What I do is I move my stop loss to break even. So usually when I get up around 10% and I don't trim, I'll move my stop loss up to break even. Or if I think a trade can go crazy and I have a lot of conviction in it, I'll take very minimal trims, so small sells, but I'll just keep moving my stop loss up. So think about it. As the price goes up, my stop loss is going up with it. But say the price starts to go down, it'll stop like that. Rather than selling right here, you caught it all the way from here and caught so much more, all from moving your stop loss up. So I would definitely recommend moving your stop loss up and leaving your runners run, because what could happen is one runner can change your small account and just moving your stop loss up. It truly could. So, yeah, that's it. 15-20% stop, move your stop loss up, do runners, etc. Next, PB. What stock should I trade if I have a small account? This is tip number 5. If I have a small account, I would only trade liquid tickers. Even today, I only trade liquid tickers. Do not get fooled with all these scammers on the internet trying to pump you illiquid contracts. No, 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 no. Don't do that. Only trade liquid tickers. Like, here's a few examples: Nvidia, Tesla, Apple, SPY, QQQ, Microsoft, stocks like that. Stocks that have volume, stocks you can get in and out in any second, and you won't get pumped or you won't get IV flushed, etc. You'll be okay. So only trade liquid tickers like that, and I usually trade $1 to $2 out the money. I don't trade 0 days on the indices. I usually don't even trade the indices. But what I do is I trade weekly expirations. Unless I'm swinging, then I go farther. And then if it's a Friday, then I go lighter size, but I do trade Friday's expiration, those same days on those tickers. And Friday's usually a little fun day, you know? So I only trade liquid tickers, and I would definitely recommend sticking to like maybe 2 to 3 stocks, even if you stick to one stock for like a year until you truly know that stock in and out. Because what's going to happen is you're going to be able to recognize patterns so much faster before they even happen, and it'll result in you making a lot more money. Like my mentor, he traded SPY for 1 year straight, just SPY for 1 year straight. For me, I traded like the same few stocks: Nvidia, AMD, Netflix, IWM, for about like a year. I traded literally the same basket of stocks, and those are literally the stocks. Like I added some more, but those are the stocks I trade mostly every single day. So stick to the same few stocks. Next, react. Don't predict. What does this mean though? There's so many people who the market's going up. They're like, man, it's going up so much. I need to buy shorts. There's no way it's going to keep going up. Don't be that guy. Think about it, guys. Would you rather jump in front of the bus and hope it stops for you? Or would you rather go to the bus stop, wait for the bus to come to the bus stop, hop on the bus, and let the bus go next? Or would you rather run in front of a moving train? Or would you rather wait for the train to stop and hop on the train and go? That's the mindset you need to have. Do not wait for the market to just keep ripping so you could short. No, what you should do is wait for a dip while it's ripping, buy the dip, and make money trading the trend. So that's a way to look at reacting but not predicting. Another way is only trade setups that are in your parameters. I see so many people trying to catch every single different setup. Like, oh my gosh, it's up so much. Let me buy shorts here. Or this is a supply and demand trade here. This is a VWAP trade here. This is a this here. This is a this here. Stop. I only trade one setup every single day. And literally, I trade the same setup every single day. I don't trade a different setup. If I don't see my setup, I don't trade it. That's it. And I only trade if it's based on my parameters. Yeah, I scan, but it's not like I'm going to trade my stocks that I scan just because I think they're going to go up. No, I wait for what I need to happen and wait for it to break structure, then retest. That's my setup. And then I hop on the train. Then I ride it up. And you can watch all my videos, VWAP strategy. That's my strategy. I trade retests on breaks of structures and trends. Most people like to buy high, sell low. Buy low, sell high. I like to buy high, sell higher. And I found that's why I have such a big win rate. Like last week, I had an 80% win rate on my typed alerts. That's how. So, last but not least, guys, journal your trades. Journaling my trades, it changed my trading forever. Without journaling, I don't know where I would be at today. Journaling truly helped me identify what I was doing wrong, what I was doing right, stick to only what I'm doing right, and adapt to the market as the market shifts because the market's always changing. You always have to adapt to the market. And the only way to do that, the only way to have long term success is through journaling. And what I mean journaling is say you've been trading for a month, go through the last month of your trades, see, okay, all the trades I take at 9:30 a.m. I have a 70% win rate. My average win is 1 to 2 risk to reward. So my average win is $20. My average loss is $5. Oh my gosh, all the trades I take at 10:30 a.m. I have a 40% win rate, and my average win is the same as my average loss. I'm only going to take trades at 9:30 a.m. So what journaling your trades is going to help you do is find your A plus setup. It's going to help you find what exactly you should be looking for every single trade and only doing that and cutting out what loses for you. Because think about it. If you keep cutting out what doesn't work for you, then eventually you're just going to have such a good win rate and such a good strategy that it's just going to be like a money glitch. That's how it is, guys. So there's so many other stuffs like, okay, every single time I trade on this day or this setup, etc., blah, blah, blah. But you guys get the point. Journal your trades and keep knocking down your strategy. See what works, see what doesn't work, cut out what doesn't work, stick to what works, etc. But that is it. Let me go over it real quick. Number one, use a cash account. Number two, 10 to 15% of your account per trade. Number three, 30 to 40, 50% profit per trade, maybe trim to 20%. Number four, 15 to 20% stop. Mover stops to break even. Let your runners run. Trailing stops. Number five, only trade liquid tickers. Number six, react, don't predict. Trade your strategy, and that's it. Number seven, journal your trades, and that's how you'll have a good strategy and be able to adapt and find your edge in the market. That's it for me, guys. My goal with this channel is to truly simplify trading for you. If you enjoyed, make sure you like this video, subscribe. If you want to trade with me, links in the bio. I hope you guys enjoyed. Leave any comments if you have questions. But yeah, I'm going to start posting way more. And by the way, dude, I actually had to shoot this video twice because I made it yesterday, but the mic cut out. So I'm truly on a mission to simplify trading, and I'm going to do everything I could to help you guys. Peace out.